Good morning, everybody, and welcome to today's episode of Market Check, brought to you by BB. There is no second best daily YouTube live stream to talk about markets. Welcome to my Friday crew. I'm, of course, referring not just to my fellow panelists, but of course you, the audience. Welcome, guys. I always appreciate when you guys are here on Friday. We usually have smaller crowds, so if you have something that you'd like us to take a look at today, we probably got a decent shot of looking at it, as long as it's not completely bottom of the barrel. That's what I always have to preface when I say that. I have to preface that by saying that, of course. But yeah, welcome, guys. Happy Friday. I'm Tommy. You guys also know me as Snorlax. I'm joined by Prometheus and Louis Friday today. But yeah, it seems like we've got some blood in the streets on this fine Friday. I guess we'll have to see what transpires over the weekend. And of course, next week, you've got the VIX up 10%, the S&P and the NASDAQ down about 1.5% or more today. We will discuss these things, as well as our coins. And I see some recommendations for Chinese equities. You know, I'm going to love to talk about something like that today. But yeah, before we can do that, guys, I just took the opportunity to shout out the Friday crowd. So don't let me down here, please. Please hit the like button for us. Maybe it's just a frustration like at the market. Perfectly normal. Do whatever you need to do to justify hitting it, though, for us. We always are very appreciative when you do. And of course, you will help us appease the big tech overlords at YouTube and their and all of their algorithms that help our channel get boosted. So, but yeah, we're gonna have a great show for you all today. Yeah, might as well get into the markets now, right? Bitcoin, it kind of happened over like Asia session, right? We had just kind of Bitcoin and ETH take these huge nosedives on a 5 or 15-minute basis. We really haven't gone that much deeper since those candles were put in. So I guess we'll kind of see what the follow through potentially of this move looks like. I think it was Louis that pointed it out on our Discord call this morning. You have a lot of alts that are kind of just down between that 6 to 10% range this morning. If you are a little bit of a range scalper, I guess you're having a great time trading some of this local volatility on altcoins here over the last 2 or 3 weeks. But we continue to wait for, I think, the larger trending move, right? Is it going to be kind of a continuation of the last 3 or 4 months, or is it going to be potentially a squeeze with some of these altcoins? You know, they were looking like they were, forming some constructive uptrends. I still think many of them do. But of course, then you look at things like ETH and Solana. They do need a little bit of elbow grease here and a little bit of help from not just Bitcoin, but of course, equity markets, right? QQQ down about 2% today. The S&P down about 1.5% today. Even the Dow Jones down about 1.25% today. So yeah, we are seeing some volatility in equities, mainly from the VIX spiking back above 20. We always kind of talk about how significant that 20 level is on the VIX from a sentimental standpoint, from a technical standpoint, from a positioning standpoint, which is always the most important, right? The VIX accepts above 20. The next week could be very spicy. But of course, now that we are back above 20, you'll probably see some bull sellers step in. I guess we'll see who's going to win this one, right? And like I said, I think these things will probably more so be determined next week. Maybe we get a hint on what's going to happen with equities here over the weekend with crypto. I think that is a very real possibility, especially now that yesterday, or rather this morning, was our Friday OPEX or quarterly OPEX for crypto options. So I think we're going to have a little bit more freedom to move here in crypto going forward. So, I mean, let's see if we start as soon as this weekend. But yeah, let's talk about it, guys. Let's talk about, everything, right? Bitcoin, crypto, large cap tech equities, indices. We're going to have to talk about Vol, maybe some Forex, and of course, we also got some comments asking for Chinese equities. So I'd love to get into it, guys. How are we doing? What are we seeing in the markets?
Doing great. It's a beautiful Friday. It's always good when it's Friday. We're coming to the end of the week. Things are closing. are coming to a closure headed into the weekend, right? Equity markets close down, and usually we get a reduced volatility in crypto markets. But sometimes that isn't the case. Sometimes Sunday over the past few months has shown some volatility, especially with Bitcoin around futures open. So it's important to keep your eyes on that. Something I am eyeing is this quarterly close that we've kind of been talking about. And what's been mentioned in the markets is the rebalancing effect that a lot of these funds are going to have to do going into quarterly close, and they essentially are going to rebalance by their portfolios, and that entails them buying back, or not buying back, but buying a lot of equities. And so it's really interesting going into the second to last day of the trading period for the quarter. We are getting the sell off, so it just really is kind of showing that these quote unquote passive flows and rebalancing effects are not as strong as what we may think, and that I think what's really, really driving the markets is just the uncertainty in the broader like kind of macro environment. Some things that you really got to pay attention to, and we had PCE come in today, but that's kind of what I'm seeing. Louis? What are you seeing today?
I see skies of green, aka red. Seeing lots of red today. It's a red day. Yeah, looks
Not
like
for, VIX, but
yeah, not for the VIX. Yeah, VIX line make bounce, line make bounce. And we're seeing pressure on markets as a whole today, right? So kind of got to see where this bounce takes us. I wouldn't expect us to come back here, right? But I'm not really a VIX expert. I leave that to Tommy. But I'd be looking in this general area, right? And watch for a reaction here. Hopefully, this is just a mean reversion bounce, high or low, into another, series of downward price action. That's probably the best case scenario, in my opinion, right? Make a higher low, lower high, and then continue to drift downwards. So, yeah, this is obviously putting some pressure on equities and crypto today. Crypto last night, in the middle of the night, looks like front ran the equities dump this morning. And lucky us, we get another dump when equities actually do dump in the morning. So we get double the fun, it's discount double check.
I haven't heard that phrase in a very long time, Louis. You just scratched like a part of my brain that has not been scratched in a long time.
Yeah. So yeah, that's like the good thing about being a crypto investor. You get to front run the dump, and then you get to dump again when the equities dump actually happens. So it's always double the fun, But this is something I was stressing. If you guys who I was watching today was watching yesterday, I was stressing that we needed to make a move on Bitcoin soon, right? Bitcoin and ETH needed to make a move in order to keep this uptrend going, right? Or at least in the near term, and not give too much back. We were grinding into this this longer term like downtrend that we're coming into. And we were holding nicely. We're holding the high ground. But we needed to squeeze soon, or this was eventually going to give a lot of this move back. And that's what we're seeing this morning, right? And that's why I was stressing that yesterday, right? I was stressing that we needed to make a move soon, because we're not going to hang, at resistance for forever, right? Something's going to give. It was either we were going to continue to squeeze and come back to our range lows, or we were going to give some back and then probably, put some basing in down here. And that's what we're seeing now, right? So Bitcoin all in all, not horrible, right? It's only like we're only down like 3 something percent today, 4%, right? Still haven't given up any lows just yet. I wouldn't be surprised if we at least ran one set of lows at this point. We've come this far. I wouldn't be surprised if we, ran a low. But I'd be looking to hold this, this white box. I think that would be, okay. And that would allow us to put in a base and continue because if we don't hold this white box, in my opinion, we're probably going to come back down to here, right? And we don't want to come back down here for a third time, right? We've been here once. We ran the low. We started our climb. We start coming down here a third time. I think we're likely coming lower, right? So for the overall health of Bitcoin, this isn't end of the world, right? But I think we kind of need to hold this area where we could run a low, still kind of maintain the high ground on this, on this liquidity level we've been stair stepping beautifully on, and then go for a chance at breaking this downtrend. And that's what kind of the bulls need, right? The bulls, that's what, if you're a bull, that's what you're looking for, and that's what you need. So I'd watch for maybe one more push lower here, and then watch for some sort of reaction, whether it's a spring, right, and a reclaim, but on the lower time frames, something like that. But yeah, I wouldn't be surprised if we got one more leg lower on Bitcoin. And ETH, kind of same thing. I was talking about ETH yesterday, that we needed to keep this stair step going, and we couldn't spend too much more time up here with, without this thing breaking down. And it was either going to be a big move up or a big move down, and we got the big move down. So we're back to market structure, right? We're back to prices seen 10 days ago, right? It's not the end of the world. It's not the end of the world. It's frustrating, of course, right? We're trying to get some constructive price action out of ETH for once. I've never actually seen something like this, right? It's pretty insane that ETH can't run one high. It hasn't. I really has not ran one significant high other than this reserve pump in like 2 or 3 months. It's just, it can't even get like a decent mean reversion bounce in. And I mean, it's just insane. It's really insane to see. But hopefully this is coming to an end. But again, we are, this is what bottoms kind of are, right? Like you make progress up and then you come back down, right? Then you make progress up and then you come back down. Like it's always like 2 steps forward, 1 step back, and slowly but surely you kind of grind higher, and over time you run out of sellers. Right, you run out of supply overhead. But yeah, pretty much, I think we probably hold this area, right? I really don't think we make new lows on ETH. If we do, it needs to be like a trap, right? It can't be like sustained price action down here. You start trading below 1,700, I got to be honest, ETH is not looking. It's like it's cooked. It's cooked. That's kind of like the line in the sand for me. So we're kind of in, we're close to that area, right? But again, you gotta give this time to figure out and put in a bottom, right? Bottoms aren't always like a V, right? Like let's look at last time ETH had a big drop and put in a bottom, right? That was here. That was here, right? Like this, horrible. It's just like when you're in this and you're trying to catch the bottom, or at least just get some relief or get off the floor, and you just trade sideways. This was 4 months, right? This was August to November before we left this range, right? This is what bottoming ranges look like. This is reaccumulation. Now, I don't think we have 4 months down here, right? I really don't. I mean, anything's possible, right? I mean, I'm kind of saying that more basing on the cycles, but obviously we're kind of drifting away from those cycles and we're kind of coming into something completely different. I think that's very obvious at this point. However, as far as, monetary cycles, presidential cycles, those are still very much real, right? So I don't think that we have 4 months to range for ETH down here. Maybe a month. Maybe a couple weeks more, right? We've only been down here for 20 days, right? We've only been down here for 20 days. So compared to last time, not much, right? Not much. And people are already giving up, and people have already given up, So I really don't think we have 4 months down here. But, at this point, since we didn't squeeze and continue moving up yesterday and we came back down, we might have a little longer down here now, right? Unless we get a miraculous like squeeze back to the upside. And this was just a rinse of the longs that built up on this climb, rinse the longs, and then you see a nice big reversal. Like that's always a possibility, right? But I'm not going to bet on that, right? Instead, at this point, we had our shot. We lost our upwards, our rising demand. Now we probably have to base in here a little bit, but I'll be watching how we react down here. You know, we swept these lows, but we still got some more lows here. So again, similar to Bitcoin, maybe one more stab lower, and then we see how we react, right? But we'd want, if you do come this low, you want to see a big reaction down here, right? You don't want to hang out down here too long. If you want to see ETH and Bitcoin and altcoins bottom here anytime in the near future.
Yeah, I think for me, the way I'm viewing ETH at the moment is pretty similar, right? Well, at the very least, I've kind of been wondering when this thing is going to rally, not because I'm a huge ETH bull, but because I think it provides signal and clarity for altcoins, which there are a few of them that have kind of been grinding up, whether that's going to be for a squeeze, whether that's going to be for extended trends. That can vary based on the asset, I think. But from a technical standpoint, you have, I think, the right idea, Louis, as far as like the levels that you've marked out. Like, I mean, we have to hold above 1825, 1850, or else ETH is probably going to take a nosedive. And at that point, I'm going to have to assume that equities have also, you know, not given us a rally into next week, like I was kind of expecting, and that they're going to continue to drop lower. But I will say that's not really the camp that I'm in at the moment. I still think that you're going to see ETH probably hold this level, at least on Disco. I think we'll revisit that point later throughout this year. But I do think in the interim, in the near term, it makes more sense to me that we see ETH hold, and maybe over the next like 2 weeks or so, put some sort of squeeze in, right? But that is going to be, as we can see, very dependent on what equity markets are doing. We're down 1.5% to 2% at the moment across the board for the S&P and the NASDAQ. So if they don't bounce, I wouldn't really be expecting ETH and Bitcoin to bounce either, right? Structurally, you can look at, I've already seen some people make the parallels on X of how similar the S&P, for example, looks to 2022. I don't know if I think it's going to play out exactly the same as 2022 did personally, but I mean, I'm going to continue to kind of say this. I think the price action that we are seeing in crypto is very familiar of that of a bear market. It feels less like a bottom to me and more like a short term. I mean, maybe you're just going to try to play a counter trend rally. That's my goal at the moment, is to be prospecting low cost of capital counter trend rallies in crypto. But I do think on a general level, some things are going to have to change in the macro regime for me to get seriously bullish on ETH again specifically. But you know, obviously Bitcoin has been trading a lot more strongly than ETH, but unfortunately I mean, like the crypto tail is very much wagged by Bitcoin at the end of the day, and Bitcoin is now wagged by TradFi. So if you're wondering why we're seeing the price action that we're seeing today, like, again, you are indirectly or basically just directly at this point trading equity markets since the Bitcoin ETF.
Yeah, I tend to agree. And I mean, the kind of inspiration that I had for my short quantum trade was built around the kind of wedge that the S&P and the ES was showing up at the highs, right? And I was kind of eyeing that 2021, you know, December 2021 high to beginning of 22 price action behavior. Now, do I think we resolve in the manner and the fashion in which we did? A lot of that's going to be determined on how growth is over the next 12 months. You know, we're seeing a lot of consumer discretionaries like Lululemon, for instance. They had earnings yesterday, and they reported some like really really bad guidance, and we had Nike, for instance, same as well, consumer discretionary, and they essentially, Nike revised down and was like, to literally the low end, and was barely able to beat, so I am kind of curious and eyeing a lot of these stocks and the earnings and the guidance that they're giving, and kind of watching to see if this slowdown in growth is, coming to fruition, right? Um, because as we all know, I mean, tariffs haven't even necessarily hit yet. So if we're starting to get a slowdown and tariffs really do impact, industry and sectors across the board, what further impact is that going to have on the broader markets, right? I am still very much eyeing a 2018-esque style price action, and that's kind of what I've been, eyeing for the S&P, and I still kind of am hanging my hat on that and the way volatility is behaving. I think potentially we get, one more significant stab down, but that is probably your your low for a significant period of time. So just really, really keeping my eye on that. And, Bitcoin right now is at a key level. Like Bitcoin, I think if we lose where we're at right now, like if you lose on Bitcoin, this 84, this 84, 2 level, we go a little bit lower down, if we go below like 83.8 around there, 83.6, 83.7, then you're at, big risk of waterfalling pretty fast, and kind of rating all those lows. So you do want to keep your eye on that, right? That's all liquidity that's been stacked up. And if you come down much further, it's probably going to waterfall pretty quickly. But if that move does occur, it's happens rather quick, and I would expect it to be, some form of, significant bottom, whether that leads into some form of complacency shoulder or to new all-time highs, or, is to be determined. But this we are at very, very important levels, and like Tommy was saying, the behavior of the market is very fascinating. We have been essentially, Bitcoin's been trading largely sideways, slowly grinding higher for the past 2 weeks, and alts have just been bludgeoned largely across the board for the majority of the time. You've had very few that have been able to outpace Bitcoin and Ethereum and actually, see some underlying bid. But yeah, man, it's a wild world out there. It's a wild, wild west, that's for sure.
I think you hit the nail on the head, Prometheus. I really agree with your macro outlook at the moment that we basically retraced the election exuberance. We haven't really priced in any of the negative growth that's coming down the pipeline, and it's probably not going to be quite as reflexive as negative growth within the first 1 to 2 months of tariffs being issued. But I share a very similar outlook for the first half of this year, right? It's probably going to be a trader's market still. I'm expecting probably another leg down across all markets at some point before the summer. I think it's going to be difficult to time, of course, but when you kind of look at like the seasonality of unemployment data as well, this is something that I thought was pretty interesting, right? How do you say his name? Nick Timmy, the guy who's supposed to speak to the Fed. I don't know how to say his last name, but he posted a really, I thought, interesting chart kind of talking about unemployment data that you typically see unemployment rise the most in Q4, actually. So I don't expect anything per se to like truly break. If it is going to happen, it's likely to be at the very end of this year. But I think at the very least, this first half of the year, it's probably going to remain a trader's market. There's going to be opportunities to play some pretty significant bounces on risk, given the way that some of these assets have been beaten down. But I think in between that as well, you're probably going to get a pretty nice leg down to play, which, I mean, to me, it's just like what I just said is a lot of volatility. So if you like to trade, if you like to capitalize on significant amounts of it, you're going to have a lot of opportunity to do so this year. of course, don't like size like a dickhead, but you know, you don't want to blow yourself up on any super volatile move. But I do think there's going to be a lot of opportunity to make money this year. If we lose 84K, what's a good spot to bid? There's a ton of support down there. I mean, I'd probably say the lows on Bitcoin would probably hold on a retest, right? That like 75 to 78K territory. If we do get down there, I would expect them to hold. If we go higher before we visit those levels, which right now is kind of how I'm viewing the market, I'm not intending to bid that level though. I would probably be looking to bid lower, but I'm not sure what I would say to that if that were the case.
So if we go higher first, you think we're going to come lower afterwards?
Yes. I think that I really feel as though we're seeing some high time frame trends have shifted. But that's not to say that there's not some really juicy bounces to play, which has really been my priority over the last few weeks.
Yeah, that's just at this point, that's just the safe way to play it, you know. And then worst comes to worst, if you know you gotta reallocate. It's just the market's just been, you know, it's just been brutal. You know, people trying to you know, catch the bottom, call the bottom. It's just been tough, you know. But yeah, if Bitcoin loses 84, you know, like if we lose this area, you're probably coming somewhere in here.
Right? Yeah,
so
100%.
77 to 80. But
yeah, and if you look at the daily chart too, I mean, and you look at those daily candles, it is just showing, you know, when you have candles like that just stacked up on one another, that's just indicative of like ton of liquidity, you know.
Yeah.
Ton of liquidity. It's just waiting to get
that's kind of why I've been saying like this thing needs to like separate, you know, it needs to kind of get extension away from this in order to not, you know what I mean? That's why I was so adamant on like this has to happen soon or else, you know, you're coming for this, you know, it's very obvious. And this is like what a lot of alts look like right now, you know, a lot of them are doing this and now they're coming back and doing this. I mean, this could be like you're bottoming for alts, right? Alts do this, roll over, you kind of make a double bottom, maybe you sweep the low, whatever, and then you get the big bounce versus off of this, you know. You know, this actually makes more sense, right? This makes more sense. So
yeah, and you just
I'm not counting out the market just yet, but
no, I'm not either too, and I just want to clarify. It's like it is important to call it for what it is. We just aren't in the environment to where alts are really able to thrive. You know, we just need some form of clarity from a macro perspective, and then you are able to enter into, you know, a more risk on environment where people are more you know, incentivized to bid. But just the market's a little scared right now. You know, it just is what it is. You gotta, you know, when it's green, you gotta say it's green, and when it's red, you gotta say it's red. But I think it's important too, like Tommy said, it's very much a trader's market. You got to be agile. You got to be quick on your feet right now in these markets. And most important is like, you don't want to be bag holding. You know, it's if you get some decent returns, you know, take some profit off the board, take your initials and then look to reallocate when we see some form of, you know, environment or just from a time frame perspective that's a little bit more conducive for things to run, because right now they aren't. You know, it's just very much been a sideways grindy price action, and to find out performers has been very, very hard. You know, in the Discord we've been calling KTA and based Fartcoin, and both of those have just been an absolute, you know, warriors in this market, and, you know, been an absolute blessing with what's been going on. So it's been nice to have something like that, but it's very difficult to find plays like that in environments like this. But it's also very hard even for the strongest of the names to continue to outperform, you know, against broader market trends. And so I just want to see, from, if I'm bullish here, you know, which I am very much on the fence, like I could go either way with the markets right now, genuinely. And I think that it's important to understand, like, from a bullish perspective, you just want clarity in regards to tariffs. You want Japan to not liquidate themselves again. and you want, you want growth and earnings to continue to actually start to look better than what they've been looking like. So just some things that I'm looking for, and then you probably start to get that, big compression on volatility, which would bring some, which would bring some, which would allow some of the bigger players to put some risk back onto the table. So that's kind of what I'm watching out for. But in a bearish sense, it's like you really watch for that like 74K region is what I'm eyeing if we do come back down into there and we get one more big expansion on vol. But I think that does mark a significant low, and that's probably occurs, sometime in June. So just kind of keep my eyes out for it.
Yeah. I mean, this kind of looks interesting. This kind of
I just realized I was muted. I was talking to myself for like 10 seconds.
I was like, I mentioned vol and Tommy didn't say anything. What's happening?
I was going to say there are a lot of things that are probably going to put pressure on market liquidity until the summer, and this is something that I was texting Prometheus about yesterday. I mean, obviously, everybody knows about. You're increasingly going to hear about all of that debt maturing over as far as treasury bonds go into like June and July. There's going to be a lot of FUD around that. They're going to have to finance it, pulling liquidity from somewhere. But then on top of that, I really think you're going to continue to see this yen carry trade unwind. Remember that, guys? I mean, nobody has talked about it really outside of the BOJ announcements. They're paying attention, but they're not really paying attention, right? Because when you look at the USD JPY, I think we all agree that we are set to see the dollar come down materially. But how ironic would it be if that actually causes kind of a negative pressure to risk assets? Then, I mean, obviously we all expected those correlations to be positive, but as the dollar comes down and the yen appreciates, you're going to see stress on the yen carry trade, which will have stress on market liquidity. And I think everybody should be paying attention to it, quite frankly. And there's a trade there if you can figure it out. I've kind of placed some bets privately through our Discord, but yeah, I mean, I think there's going to be a lot of opportunity, even if you're kind of uncertain as far as like what the pricing of your favorite assets are going to do. There's going to be a lot of volatility in Forex markets this year, like a lot of opportunities that you can take advantage of if you can find, I think, the right instrument to be able to capitalize on them. But I'll leave it at that. I do think that we're going to continue to see that yen carry trade unwind, though. You're probably going to see the treasury debt hurt market liquidity as well. And then I think in the summer, we'll be at a crossroads, right? What's the Fed going to do? I guess we'll have to find out. But for me, I think that those things will probably, this like illiquid slop that we've seen over the last few weeks, it's absolutely awful. I agree. It's probably going to continue. I just hope that it manifests into a little bit more than kind of like these coiled ranges that we've been in. And I think a lot of it has to do with what vol is going to do. Prometheus was talking about it a little bit. We were looking at the chart a little bit earlier. If you look at something like the VIX, right? Is it going to be a regime close to 2022, right? Where we kind of just continuously spiked into 25 to 30 and then sold off. We never really blew out above 30. And I've consistently said, I don't really think that this vol regime is similar to 2022. And so I think for that reason, I'm actually expecting the VIX to trend lower into next week. Maybe I'm completely wrong on that. But I think that you are less likely to see VIX price action like 2022, to be honest. I think it's going to be probably a bit more interesting. Maybe a bit more opportunities for upside if you like to play volatility. But with that said, I think this is kind of a natural spot for the VIX to reject if that's going to be the case.
yeah, hopefully.
100% agree. Yeah.
Here. Yeah.
Yep. Yeah, I've been eyeing that like 22 region personally as the level to see some form of compression there afterwards. And I've been posting a lot on my timeline about the VIX. I feel like I'm just like reiterating myself 1,000 times, But really watching that 2018 to 2019 fractal, which then headed into COVID, when you get the majority of the market piling into the long vol trade and taking hedges, that's not usually indicative of you know some big systemic event happening thereafter, right? Usually what happens is you see some big compression, and the big blowouts that we see are when everyone is not positioned in the long vol trade. That is not, usually what happens, if history is indicative of, you know, of anything, right? Is if you look at the VIX chart, every time we've had a big blowout, it's been at the lows when we're near, 11 to 12. It's never been when the market has, all been positioned long vol and we're up at, 20 some odd dollars, except for '08. That is the only time that has ever occurred. But you had a heightened vol regime in through in the entirety of '07 through '08, through September of '07 to September of '08, and then you had a big blowout. So, it often takes usually 12 months for anything to really ensue there afterwards. So I
Yeah.
I'm not in the camp that anything is going to happen imminently. I've been talking about, in the Discord, my thoughts around the trade, and what I'm going to be positioning in next year. I still think next year is the time frame for something to really happen on the, big event.
I like that you brought up the fact that you really only see the blowout at the end, right? The yen carry trade was kind of like an anomaly, to be honest, in positioning. I mean, yes, we got a spike on the VIX to like 60, but relative to that sort of move, you would have expected a much larger move on, something like individual name. Uh, I'm sure you could find some other good ones, but like indexes in general should have sold off a lot harder for a spike into 65. Uh, Maybe we get one, maybe we don't. But again, I think that's something that you see at the tail end of a market trend rather than, just kind of consistently trading up there. I think it really is going to be so interesting to me. I keep asking myself this question, like, what regime are we in? Where are we in the market cycle? Because that's what everybody wants to kind of ask, like, where in the cycle are we, right? So that I can just kind of hold assets without fear of worrying about where we are in the market cycle. But I think there are really just so many different paths that this could take from here. It could be 2018. It could be 2007. Maybe it's, maybe it's another year that we're not really taking into too much account, right? Maybe like a 2015. Who knows? But I do think that we're hopefully going to have quite a few questions answered here over the next few months. Not just from Vol, but also from indices, and hopefully for crypto also. Because there's nothing better than clarity. But I guess that's kind of like a catch-22, because when you have clarity in markets, you usually don't.
Yeah. And I mean, I was thinking about that the other day, and it's so funny that, me personally, and probably a majority of the people that are in, here listening, I started my trading journey, back in 2020. And, I entered these markets, and probably we all entered these markets, and we're really starting, because we're all very young, we started our trading journey in arguably one of the most difficult times in regards to being an active trader in the markets, right? I was looking at, 2012 to 2015, and I mean, could you imagine how easy it would have been being a trader in 2012 to 2015? You would literally just, I mean, it just went straight up in a straight line to the right. You had like, few percent pullbacks along the way, and that was it. And I'm talking broader markets, and all you would have done is just short puts on majors, on like Google and Microsoft, and that would have been it. Where now we're entering a phase in the market where there are, so many different dynamics that you have to take into account, just like Tommy was saying, and there's a lot to weigh. And that's what we're here for. We're trying to make sense of the noise because there's a lot of noise in the markets, especially nowadays. Um, and I think that I would be very shocked if the United States allows, if the U.S. government allows some big blowout with the Japan carry trade. I'm sure that there will be some form of, monetary or fiscal stimulus that will probably come down the pipeline if there is a threat, if there is a risk of, a blowout in the yen carry trade. So I'm pretty sure what happened in the big vol expansionary blowout that we had was I think the Janet Yellen was in talks with the Japanese government on allowing them to, on like buying out their treasuries from them. So like instead of them offloading them into the open market, that Janet Yellen would just like just buy out all the treasuries that they're wanting to, exit from. So I think it's important too, like I said, it's like there's a lot of noise and it's important to remain, objective, and it's important to remain analytical with what's occurring on in the markets. Because it's really easy to get wrapped up in a lot of the emotions that's occurring. But like I said earlier, I think that you remain agile, you remain a little skeptical right now. And if you see some clarity occur in the broader markets, then you start to get some more risk on signals, and then you deploy some capital. But right now I'm remaining a little skeptical of the markets right now, personally.
I think we should look at some of the. I completely agree, Prometheus. I think we should start to look at some of the chat suggestions as well to continue to, I think, add to this picture. I know we've got. I know we had some past requests for Chinese equities. We've got some requests right now for USDT dominance. Let's see, what else did I miss? But I think that those are things that we should probably look at as well. We got a request for Trump. Baba on radium.
Mm. I remember I was looking for a Head and Shoulders back here. That was a while ago. Wow.
I still think Baba looks fine. Whenever U.S. equities have a little bit of room to breathe, you're probably going to see China. At least in theory, you should be seeing China begin its next leg up.
While U.S. equities pull back?
More so when they finally can find a bounce. Because what's happening is like they're flat to catching a bid in Asia session, but U.S. equity markets, when we're selling off, they just can't find their footing, right? Because nothing is going to be spared when everything is kind of selling during U.S. session.
Yeah. I mean, yeah, it would make sense to maybe pull back to this level.
Yeah, I like that level.
My only fear with China, and it's something that, I'm obviously pretty long China right now, but I'm acknowledging this, is what if this is like an echo bubble for China before the real bull market? It's something that I am not completely ignoring, but I still think the setups here favor being long.
Yeah.
Absolutely. I mean, from a chart perspective, the chart looks unbelievable, both Billy and Baba. And I was looking at the Hang Seng too. I mean, yeah, the charts look really, really good.
Yeah, I think Baba could give some good signal, right? Like if it holds here, you're fine. But if you start doing this, you're probably like, and then you do more ranging, and then you go for the real move later on, like Tommy was just talking about. Billy too. I like Billy. Billy looks really good so far. Like, I really love this base. This is a nice base. You got a nice, price pin. Like, price is really pinching in here. So I think there's a big move coming for sure. It looks like an altcoin that went through a bull market, has gone through a bear market, and now is ready to go for a new cycle. But the question is this enough time, or does this need to, do this one more time and then go, right? That's pretty much what it comes down to. Or is it ready and then it's going to pop? But I think we find out soon, probably within the next month, right? This comes into August. Yeah, so maybe probably the next 2 months, we'll probably have a better picture on if these moves you've been seeing in China are legit, or
I agree.
or we have more time.
You know what that chart reminds me of is Aave.
Yeah,
Reminds me a lot of Solana.
Yeah.
Yeah. No, I mean, this is this is beautiful. I love charts like this. You get a chance to accumulate in like a nice bottoming range with like tons of upside, but like invalidation not too far below. Like, it's a great setup. I love this. So lots of room to run too. This thing can come to $40-$50 minimum, if this thing breaks out. Probably even higher, maybe even up in here, 80-90, first major market structure other than here, So the risk reward is there. Just depends if it's going to happen now or later. I think we'll find out in the next month or two.
Got a request for NIO, which I'll be honest, my conviction on NIO is much, much lower than the others. I mean, the company's kind of a fraud, even though I own some. Hasn't really stopped me from buying crypto stocks, or not crypto stocks, but crypto coins, tokens in the past. But I mean, I know what NIO is, right? It's a scam, but I think it's obviously a more speculative way of buying Chinese equities. And so I think for that reason, you'd much rather invest in something like Baba and Billy more heavily. But I do think, if the whole sector is going to run, then obviously you're going to see NIO run with it.
Yeah. Like Baba and Billy are way farther along in this chart. And I think they just got back. It probably looked like it was good to start curling up. And then it got the tariff news, right? On like cars, on the aluminum or whatever, on the car parts or something. I don't know. I can't keep up with all this nonsense. But yeah, this thing looked like it had promise to probably start carving out a bottom here and curling, at this level. But got bad news. And now it's coming further. So you're probably going to come down to here at this point, like $2, 222. And this is like the bottom of the barrel bidding range if you want to take a shot, But yeah, I don't know. I don't know anything about the company or anything like that. So
one stock that I'm really bullish on, or not really stock, but the company is BYD. I don't know if you guys have seen Chinese electric cars. They are insane.
Should I pivot on NIO? Should I pivot to BYD?
If you look up BYD cars, they literally make Teslas look like a joke.
That looks like Bitcoin.
Yeah,
that looks like Bitcoin coming out of that like 7-month range.
Oh yeah, it does. Yeah, their cars are insane.
You can't even trade this though. This is on the. Can you?
No, you can't. It's on I think it's like Chinese only equity. Yeah. HKEX.
HKEX. What else do we want to look at?
We did get a request for USDT dominance and also Trump, so we should probably look at those.
All right, I'll do Trump, but I don't have a chart for USDT dominance. I don't know if you guys have one, but
I don't really trade it, to be honest.
Yeah.
Not that I think it's not useful. I just don't. It's just not really a chart that I use.
Yeah, so Trump's been pretty much trading sideways for like 20 something days now after being in a perpetual downtrend for like a month or two, making consistent lower lows constantly for about a month and a half, 2 months. And now we're starting to trade sideways, right? So for now, we haven't made new lows in about 20 days. And, this area, right, I think is a great spot for a potential bottom, right? The trend is showing a shift from lower low after lower low to, sideways at a minimum, slightly higher highs, but now we're losing that. So not yet, but more or less sideways, right? So I'm really looking at this as more or less a range down here on the lower time frame. If you really want to get granular with it, right? You'd want to reclaim this 3-hour local range, right? Get back inside, and then you want to start to see it climb, right? But until we break this low time frame range, we're probably going to remain sideways, right? But I think it's a great opportunity. Like this general area, I think is a good spot to buy, right? You start losing this low, all right, maybe not, right? But until then, you're okay, right? You're okay. So like right now, I'm looking at this as a potential one more deviation of the low, right? But it needs to probably reclaim this, But higher time frame, yeah, you have to break these highs in order to get anything going here. But I like the shift in trend from down to sideways. I like that, that the sentiment on this thing is down in the dumps. I just like setups like this. So, but yeah, I mean, this range high needs to get broken. So once you can get above this level, right? Above, that would be like 1250. I think you have confirmation that you're coming up here at a minimum, right? And then you see if you could stair step it back to these levels, right? Not seen since February, right? So only a month ago. But this is kind of my base case, right? Just either a big move or just a slow rounding bottom grind back to the upside. If this thing isn't a complete scam and it's going to go to zero, right? There's still a chance it can, right? There's still a chance it can. But I think it's in a good enough area where it's worth the risk reward to start taking shots down here, in my opinion. So that's what I'm doing.
Yeah, like you said, I think the chart is, pretty decent RR here.
It needs to
definitely.
hold here, man, or it's just going to be another like meme coin story that just goes down only perpetually.
Yeah, I would agree with that. So I'm watching closely.
I almost wonder if this is going to trade like Doge, because I know there's been a lot of comparisons to the Trump run up versus Doge in 2021. If you were to just kind of like compare the two, right? Doge gave you some nice bounces. I think we're at the part where we're probably going to see Trump bounce. I'm increasingly skeptical that it's going to give like a huge move higher, but I do think like 100 to 150% from current prices, definitely possible if you're going to hold these levels. It's just so difficult playing these Solana meme coins because after their parabolic run up, you try to catch a knife, like maybe you catch a squeeze, but it's just they go down only, man.
That's the one thing that I'm like, I really don't like about this token is that it's on Sol. I'd like it so much more if it wasn't.
You just don't want it to be like bonk,
Or Bowden.
Yeah. Oh my.
Bowden. Oh my God.
Or goat. Have you seen the goat chart?
I haven't looked at goat in a long time. I think that was a coin that I was at a friend's wedding that weekend, completely like away from screens, and I just missed the trade. So I have coped by just not looking at the chart.
Yeah, I think it hit over 1.3 bill. I think it's at 50 mil now. Oh my gosh.
Yeah, that's what's left of it.
Was that like 200K market cap? 2
I have
mil?
no idea. Something like that. But if one of you can take it for the USDT, that'd be appreciated. I gotta go to the
Prometheus.
Tell me.
I don't like to share my screens right now because I still got like this big brace on the hand that I use to scroll through charts.
Yeah. Yeah. Let's see.
I'm not that proficient yet. Hopefully, when I get my wrist back in like 2-3 weeks.
They took it from you?
No, on my wrist, yeah, it's gone. It's gone, and I'm never getting it back.
Yeah, let me share my screen for you guys.
It's funny because my back is like I don't really feel that much pain, but I can definitely tell where the vertebrae were like got messed up because it's like an acute feeling of just I don't even know how to describe it honestly. It's like it's not even sore. It's just I literally can't even describe it, but I can feel the area that got injured healing, if that makes sense.
Mm-hmm. Okay, let me know.
I will say I've been kind of like taken aback at you're on the screen, Prometheus. Yeah,
Sweet.
I've kind of been taken aback at how much like muscle atrophy I've had in my leg.
It's wild. It
Weeks.
is wild. But you'll get it back. That's the thing. It's once you stimulate your muscles again, you'll be able to get it back. And I know you, as soon as you're able to like get in the gym, you're gonna go crazy, be an absolute maniac.
Oh, I cannot wait. You have no idea how much I am missing going to the gym every day.
But I mean, so all right, so we're on USDT dominance. I mean, I'm watching the same thing that everybody else is. You got some, major levels on the chart that you want to see us reject from. Like Tommy was saying, I don't necessarily see as much alpha in USDT dominance as it maybe had in previous cycles. And the reason for that is due to the increased correlation that we have to the broader markets. I think that as people, as smart money and institutional money starts to pile in and has continued to pile into these markets more and more and more and more, I think stable coins become less, they lose their I think the USDT dominance chart loses its edge in a way. I get what everybody's thesis is, on USDT dominance, less people in Tether means more people in the markets, yada yada yada. But you also have to understand where the flows are coming from nowadays. A lot of the flows, and like I've talked about on previous spaces, I've talked about here on Market Check before, has largely been driven by institutions this cycle. Now, how do we know that? Because of price action behavior of Bitcoin versus the broader market or the broader crypto market. You've had Bitcoin make significant new highs where the rest of the market is not. And as we know, the institutions are largely based in Bitcoin, and a little bit in Ethereum and a little bit in Solana. And they're not positioned in the rest of the market. And retail has not been able to drive prices higher in the rest of the majors, right? Ethereum hasn't made a new all-time high. Solana hasn't made necessarily, a new all-time high. I don't count Solana's, wick of its high as a new all-time high, right? New all-time high is significant price discovery. And so because of that, I don't see, a chart of stable coins being, alpha in the sense that it shows whether or not participants are, actually in these markets or not, because what has been the driver of the markets? It has not been retail. It has been institutions, as we know. So this chart, I get why everybody's looking at it. I have different viewpoint on it, and if you are looking at this chart as alpha, it's from a charting perspective, this trend line that everybody's watching is a must hold, or a must, you must see this not break back above. Because then if you do see us break back above, then you probably see, us go for 6.3 to 6.5% rather quickly. So you want to see us, reject from here, or if anything, you want to see us raid that wick high and then come down from it, right? You want to see this be the resistance for further price action down, and then come back down. But that's kind of what I'm watching on that. I get why everybody looks at it, but it's not necessarily the alpha that I choose. Can we discuss Fartcoin? Yeah, we can discuss Fartcoin. Fartcoin looks great, guys. I think Fartcoin is a chart that has been, a sleeper, not really a sleeper now, but it was a sleeper at the lows, back at the beginning of the month. You saw it really start to garner some mind share across the broader market. You saw, a huge level hold. And now what we're doing is we're coming back and we're retesting. We retested this really heavy supply overhead. What you want to see hold is you want to see this 45-cent region hold. This is a really key level on the chart. We likely had people that, accumulated down here, take some profits back up here. And you want to see these newer holders that bought, up on this wick, continue to accumulate at these levels and probably see us round out somewhere down here around the 45-cent region. I'm really watching for these levels. And if you can round out around these levels, around the 45-cent level, then, we probably start to grind up back up into the supply region. And you then are looking for some large expansionary move to the upside. Next stop is, $1.13. We come into that level and you watch out for that. You could say the 80-cent level does have some resistance, but I would be shocked if that's all she gives, because what happened was everybody that accumulated down here took profits at this, major resistance level. And then now what people are doing is then reaccumulating down here. People are then going to target the 80-cent level. You probably come back down, low 70s, maybe mid 60s, and then, work your way back up. So I think high time frame target on Fartcoin, you can absolutely target the $1.10 10-cent region, $1.10 region, and as a high time frame price target, because everybody wants us to go straight up in a straight line. As we know, that's not how markets behave and how price action works. So we got out, some people took profits here, want to reaccumulate here. People that accumulate here are going to probably take profits here, another reaccumulate. People take more profits here. But chart looks really good, and it's garnering a lot of mind share in the markets right now. So I like what it's showing. It's showing a lot of strength across the market. So I love to see it. Let's see here. Are we cooked? I don't think we're cooked. I think the market just needs some clarity right now.
I think we're at levels where if kind of some of the leading altcoins want to continue trending, they're going to need to hold, right? Like Fartcoin, like a Sonic. I'm sure you could pinpoint some others, but those have really been the strongest ones on my watch list. In theory, if we're going to be, if they're going to continue to trend higher, these are levels where they need to be holding, or else they're going to start to threaten round tripping their entire pumps.
Yeah, I agree. I'm in the same boat. I mean, you're at a key level and key inflection point across the board. There's some major levels. This is Sonic, previously FTM, but these levels, you got to see stuff like this hold. And you really don't want to see Sonic, honestly, if I'm being real. you probably don't want to see us lose this 50-cent region, to keep
It
it
would look
above.
really bad if it loses 50 cents.
Yeah. You want to see that hold. That is your like kind of do or die level. But I mean, it's the same as like Solana. Like if we look at Solana, for instance, right? Like Solana has to hold $1.20. Like it is the most important level on the chart. It's the equivalent for me of BNB at when BNB was at like the 220 level. When we were down here and everybody's like BNB is about to blow up, CZ's going to jail. FTX 2.0. Solana's the same thing. Solana's like 120 level is that 220 level for BNB back in the day. And I think if we do hold it and we are able to base out here, get some clarity, get some, have growth continue to do well in equities and Japan doesn't blow themselves up, then
I think that's inevitable.
yeah, I mean, dude,
That last one, at least.
Yeah. I mean, I get it. I get where you're coming from, but that Janet Yellen is going to backdoor QE the crap out of that. She's going to step in with the iron fist. But
Yellen's not at the wheel anymore.
Well, who's at the wheel now?
It's Percent. I'm going to stick to my guns, though, that at the bottom of this, at some point, the bottom of the next bear market, Janet Yellen is going to go to prison. Or at the very least, be like charged
like
for treasury fraud, probably.
Like bribery. Yeah. I mean, we all know they're getting, hooved money underneath the table. But I mean, we lost the 130 level on Solana. I would have loved for us to reclaim that. You probably want us to turn this into some form of head and shoulders, or inverse head and shoulders, that is. Come back, retest what I have deemed the iron wall on Solana and have something like that hold. If you don't see that hold, then you do come back down into this demand region. That's just something that I'm eyeing because, largely all the liquidity from the August 5th low was swept down at the beginning of March. And so there is no support if you lose this 120 level. And Solana's definitely coming back down, probably sub $100, probably pretty quickly too. Because there just hasn't been really an underlying bid in this chart. It's been pretty rapid expansion to the downside. And you do, like I said, you want to see that hold. You want to see the 120 level hold. Really, really important level. But if we do see it hold, right, you come back up into this, this level, the 130 to 140 level, and you want to see some constructive price action around here, which will then give us the room to come back up. We probably get an underside retest to the 170 level. But this chart has got some work to do. We lost a lot of key levels and we lost it quickly. It was this was pretty ugly too. This candle right here back at the beginning of March where Solana went up. Was that the like strategic or the seized asset reserve announcement? That's what it was. And then you saw us, immediately reverse it. So we got a lot of major levels that this chart has got to reclaim in order to do well. But yeah, I'm with Tommy. Like you got some major levels across the board that you want to see hold. Still eyeing this right now. Threat of waterfalling down.
There are quite a few longs coming in from what I can gather. But I mean, they're coming from two places mainly, which are Bybit and Binance. I guess we'll just have to see. I really think kind of this weekend will be quite telling. If you're not completely nuking within 24 to 48 hours, it's probably a pretty good sign that you're going to see some reversion next week, not just in crypto, but also for equities. Of course, crypto nukes this weekend, you probably have a taste of what you're about to see in equities.
Mm-hmm. And
yeah.
And something that was discussed too. So this chart or this level I have marked out here, at 55.65 for the SPX was the JP Morgan collar trade. So that is a level in which JP Morgan has 40,000 contracts of SPY puts on to hedge their long exposure in their bags. And when you start to get closer and as the puts start to appreciate, this essentially becomes a magnet. That's why we saw such a voracious move to the downside on the SPX, is because market makers largely have to hedge that gamma or the change in delta that occurs when we have that move. And we saw obviously this level hold, because once you get down to it, then it becomes major support, because essentially what you have happen is you start to see those hedges unwind and that position start to come off as we start to get down here, and the market makers have to hedge that gamma down here. But what I did not, and what I don't like to see, is this daily candle. This is not what you want to see.
That's a nasty daily candle, man.
This is not what you want to see. And that JP Morgan collar trade is only on for the rest of today and then Monday. And then they open it back up for the next quarter. And the suspected level that it's going to be at is 5,200.
That's for Q2.
That's for Q2. That's the suspected level that JP Morgan's collar trade is going to be at for Q2. So
I think that's a good level for it to be at.
Yeah.
Call me crazy. I'm still not ruling out another push into or to or around Liberation Day. It's been called
Liberation Day.
I guess it really just depends on what the VIX is going to do here, honestly. Like if it's going to continue to base out for what I would probably consider to be a larger move higher, or if it's going to continue to just kind of repeat the 2022 price action, then I guess we keep selling on the S&P early next week and probably sets up a long in early April. But regardless, I think we're very close from a time standpoint to a nice reversion trade north. It's just it's difficult because I think if you are looking to play longs, that is probably where the juiciest move next is likely to come from. You just have to manage your risk, because this price action is just absolutely brutal for top longers, for bottom shorters. Again, this is illiquid slop price action that we usually see in bear markets.
Yeah, it's been tough trading, man. Tough trading.
Yeah, that's why I took some exposure off the board. I took some risk off the board, because you got to call it for what it is. The markets are just super uncertain right now, and I will be looking to deploy capital when the conditions are just more suitable for my kind of, if you're a bull market hero and you thrive in the bull markets, then it's important to, and I myself, like, I think most people do well in the bull market. I think Tommy's probably one of the only people I know that generates larger returns, or what seems like larger returns in bearish environments. But I mean, me personally, I do better in bullish environments, and so I'll wait to put that exposure back on when environments are more conducive for that. So I mean, yeah, we got this underside retest on Tuesday. I was looking at that, but if I put on the 2018 fractal, which is similar to what kind of I've been eyeing, then you would get some form of behavior, like this. And this is the 2018 volatility regime is to kind of what I'm eyeing. So if we do get one more stab, it's probably almost something exactly like this. We trade sideways into the middle of April. That coincides with Tommy's thesis of getting some form of mean reversion to the upside in alts. We probably see volatility come down. People stop longing vol and start shorting vol again, and then you get one more big stab down, and then some form of hard reversal. Trump's talk and his rhetoric that he doesn't care about markets, that only goes so far. that only goes so far. There will be a point where if we come down to, like, let's say 5,200, to where he starts caring. and and that also will then probably push the Fed into cutting, which is ultimately what he's trying to do. He's trying to strong arm the Fed by, causing a deflationary environment through tariffs and through his policy into cutting, because that's what they want to do. They want to reduce the burden of the debt wall that is coming to maturity. And what he also wants to do is he wants to stimulate housing, because you got to understand who Trump is and where he comes from. He comes from real estate. That's his bread and butter. What does he want to do? He wants to stimulate and make housing thrive. That's a large piece of his portfolio too, right? Trump's bread and butter is the housing market, um, and is commercial.
What do you think about the housing market this year, Prometheus? I know that we haven't really talked about that much on this show. It's always such a difficult thing to forecast because it's been so resilient. But I mean,
Yeah,
I feel like if there is going to be a time for a correction in housing, if not this year, I am not sure when you're going to get one.
I don't think you get one this year. I think probably what happens is, well, okay, so you mean like, what do you mean by that? You mean like a reduction in mortgage rates?
No, pricing.
In pricing, yeah, I don't think you get a reduction in housing until 27 or 28. I think you have a big unwind in the housing market that's likely going to occur, then largely stemming from the, post-COVID Airbnb frenzy bonanza, which you're already starting to see unwind, right? I remember a bunch of my friends' parents kind of jumped on that train, and you saw everybody just buying up real estate, everybody buying up houses, buying condos, buying duplexes, Airbnb-ing them out. And you're seeing places already like Fort Lauderdale and large places, or places in Florida, and these vacation spots, to where you're having less and less people traveling, and you're having less and less people actually renting out these Airbnbs. And there's a big issue with that, is if the rent can't cover the mortgage anymore, then they essentially have negative equity in the property. And especially if you start to see the value of the houses go down, you start to see this really nasty feedback loop, to where they have less equity in the house than the actual than what they have in it. And I think that unwind starts to occur probably in 27 and 28. So that's something that I'm watching out for. I think that getting into buying a house right now and entering a mortgage right now is probably largely foolish. I think that rates will come down too towards the end of the year. We'll see, mortgage and housing rates probably hit around 5% by, sometime beginning to mid next year. So I'm kind of watching out for that. I'm not in the camp that I want to buy a home right now. I think they're overvalued, and
I
I think
definitely
that,
agree with that. I don't think it makes sense to buy a home right now. Maybe
yeah,
that comes back and bites me, and people will ask that question, sidelined question mark. But I think it'll age well. I don't know if we're gonna have like a 2008 style housing crisis within the next few years. Maybe we do, um, but I just don't think it. Like, I feel fairly certain that housing prices will come down over the next few years, and that there will be a better opportunity to buy than currently. Guess we'll
absolutely.
just have to see.
I think once that supply starts really hitting the market, because that's the biggest issue now too, is the supply that's on the market, right? The home builders are not incentivized to build, affordable housing, or to build, um, your standard like middle class house anymore. There's no margin in it for them anymore. They are only incentivized to build more on the higher end for housing. And so there's no supply for you, specifically the younger generations, to be able to buy into. And because of that, like I said, I think that you have an unwind in the Airbnb frenzy, and you're already starting to see that. And a large portion of that supply is that more affordable housing, is that real estate that is more tailored towards people that are starting families or that are new to marriage, right? So you start to see that unwind, you start to see that supply flood the market, and then you'll see those housing prices really start to come down.
I'm very interested to see kind of what happens in some of these market sectors when we see liquidity materially come down into the middle of the year. Really is going to be interesting, I think, not just as far as like obviously the treasury debt, but of course we talked about the yen carry trade. Some people who have been swimming naked, I guess maybe the tide's about to come in for them. We'll see. But I think that's a good spot to probably wrap up the show, unless you guys have anything else that you want to touch on an individual basis.
That's all I got, really. I mean, somebody requested Pepe. The chart up that I have up is pretty self-explanatory. We rejected from a major key level. We were talking about this before the show started, but you really want to see this, like, we'll just call it 7-cent region hold.
I feel like Pepe is one of the better looking alts right now, actually.
Oh, 100%.
At least
most charts do not look as good.
Time frame.
Yeah, I mean, even the high time frame, like it is a really good looking chart actually. Most the blue chip memes do not look like this at all.
That's because they're not Lindy. Not Lindy memes. Make originality great again, right? I mean, there was just so much dilution on. I almost feel like that kind of helped ETH a little bit, or rather ETH memes. At least Pepe. Maybe I should just say Pepe, because you didn't have quite as much dilution on ETH as you did on Solana, because there just wasn't as much network activity going on. So maybe Pepe was spared for that reason, right? There wasn't as many like vampire attacks on its liquidity. But that's just I just kind of thought about that. But with that said, Louis, can you pull up the terminal? Is your terminal working, by the way? I know we're still running.
Yeah, I got access back. Yeah.
Hell yeah.
Pull it up here.
And I was able to see through the terminal, guys, that Binance and Bybit are longing this dip. Make of that what you will. I mean, I know Bybit gets a negative rep, but they've actually had, I mean, Bybit's been pretty decent lately. It's been more OKX and Hyperliquid traders that have been the fade from an open interest standpoint that Bybit used to be, and obviously Binance as well. Binance is kind of the smart money. Hold on, I'm trying to add you to the stage. Oh, I have to remove Prometheus. Sorry. If you guys enjoyed the show today, I know we had a smaller crowd because it is Friday, but we hope that you still enjoyed the commentary. I felt like we covered a lot of like very high time frame topics, so I hope that you guys found it useful. Just kind of giving some outlooks on not just the next like week of price action, because as we know, that can be pretty high level of variance, but also what we're expecting here over the next few months and even over the course of 2025. But yeah, if you guys enjoyed the commentary, like I said, we've got a few ways that you could potentially join the BB family, starting with what Louis has pulled up right now, the BB terminal. Whether or not you are an active trader trading lower time frames, looking at open interest data, whether or not you are a long-term investor looking to use data to help drive some long-term investment decisions, and of course, whether or not soon, whether or not you are an on-chain degen, you love playing in the trenches, meme coins, and everything else, we will have the tool for you as well. So check out the BB terminal, guys. Devs are doing something all the time. We are continuing to build out more and more functionality to make this the best possible tool that you can use throughout this market cycle. Of course, we also have the Discord. We talk about it every day, but you guys get 3 to 4 hours, 4 to 5 sometimes of calls every single day. You get access to our intimate thoughts on the market in real time, and of course, even our positioning. And we were nice enough to package that together with the BB terminal. So if you were interested in one, wanted to get a discount on the other, you have the optionality to be able to do that. And of course, if you're looking to hone your educational base or even reach trading level mastery, we've got the BB Academy. So check that out as well, guys. And last, but certainly not least, maybe this market volatility has gotten to you a little bit. Maybe you cannot take, what's that copy pasta? I can't take it anymore. I'm completely exiting the crypto markets. We've got a solution for you guys as well, or really anybody else who's interested in allowing the team to manage capital for you. We have an SEC registered hedge fund, BB Wealth Management, where we look to capture the asymmetric history of upside returns for all digital assets, while of course managing the downside risk posed in any financial market. So if anything that I just said over the last 90 seconds resonated with you, you can get more information on all of these offerings that we have in the description below this video. But we hope that you guys enjoyed Market Check today. This is our last show of the week, so we will be back on Monday. A reminder that we are live Monday through Friday, whenever the New York Stock Exchange is open, with our typical start time around 11 to 11:15 a.m. Eastern Standard. Make sure as well to wrap up your week, check out Market Talk with King Wabi. That is an X Spaces hosted through the BB account, as well as his own. So make sure to stay following and subscribe to both of those accounts so you can be notified, not just when we schedule those spaces, but of course also when we go live. That's it for today's show, guys. Thank you as always for tuning in. We'll see what we get this weekend. I think you'll get a bit of signal for how we can expect equity markets to trade next week, probably here over the next like 24 to 48 hours. So at the very least, we always like having clarity, but or at the very least, some expectations to go off of. But in the meantime, y'all have a great weekend. Get outside, spend some time with your family, do whatever you need to do to kind of detox a little bit after a long week in markets. And yeah, until Monday, guys, thank you again, as always. And of course, stay safe.